The market stagnated ahead of the publication of the US inflation report, which is expected to unveil a slowdown in consumer price growth. However, a lot will depend on the size of the slackening. Thus, investors suppose that inflation may slow down to 5.3% or even to 5.2%. At the first sight, the difference is insignificant. However, since now inflation totals 6%, the magnitude of its slackening will determine the pace of the Fed's transition to a looser policy. In any case, low inflation will cause a decline in the US dollar. However, the figures themselves will show how deep the greenback may slide. Let us take a look at the European currencies ahead of the issue of the US inflation data. Thus, the euro recouped more than 50% of its recent losses against the US dollar. As a result, the number of buy orders on the euro jumped. The likelihood of the midterm uptrend continuation depends on how long the price will stay above 1.0950. If the predictions come true, the pair may reach a new weekly high. The pound sterling also partly recovered after the recent drop against the greenback. This points to the bullish sentiment among traders. Such a situation may allow the pound sterling to hit a new local high of the midterm uptrend. If the price climbs above 1.2450, traders will get a signal of the end of the recent burns. This, in turn, will boost the volume of long positions, thus allowing the price to rise to a new local high. If the technical signal turns out to be false and the quote drops below 1.2350, traders will consider this an alternative scenario. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.